Hi everyone, greetings of the day. Welcome to Scholarship Finance, where we learn A to Z of the stock market. And this video is the first one in this stock market learning series. If you are here, welcome. Welcome for this learning. Stock market learning is a great thing which will give you passive income, will generate revenue for you. So if you are here, you are into the first step of your learning process, and welcome. Let's continue learning. What is stock market? Stock market is a place where publicly traded companies issues their shares and sell it to the public. The value of the shares traded on the stock market is determined by the supply and demand. If the company is really a good company, there will be demand for the shares of that company. If a company is nominally performing company, then there will be nominal demand for the shares of that company. Prices in the share market of a particular company can fluctuate due to the different factors like company performance, market trend, global conditions, and geopolitical tensions. Based on everything, the market can go up, down, and sideways. Based on that, the stock prices will also follow. What is the investment? Why should we do investment? Why don't we do investment in real estate? Why don't we do investment in gold? Why don't we do investment in FD? Why the stock market alone? Actually, investment has to be diversified. You would already have investment done in real estate. You would already have done investment in gold. You would have already done investment in mutual funds, bonds, etc. So investment in stock market should be one of the options. Which money should you bring to the stock market? The money that you bring to the stock market should be the one that you have in excess, because the money in stock market can even go to zero if the company doesn't perform. For example, Reliance Natural, Kingfisher Airlines, Satyam Computers, ES Bank. There are many to tell. So always bring excess money only to share market. However, as a process, we should invest a little bit amount of your hard-earned money in stock market, because not every stock go down, not every stock become worthless. There are good companies which, if you do proper research and then if you invest, then it can give you asset over long period of time. So mainly in general, people come to investment in stock market for peaceful retirement. People consider this as a passive income from stock market. People want to grow their money. Also, people consider this as one of the diversification of asset class. These are the main reasons why people would come to investment. Do stock market guarantee the profit? No. The stock prices, the portfolio which you have different stocks can go up, go down, go nowhere, and it can get multiplied also if the right stocks are selected at the right time. In this video, we will be studying about the stock market ecosystem, where a new investor comes into, he identifies a broker, he identifies the stock which he has to buy, and then he places the order, buy or sell. This order goes to exchange, and the exchange executes the transaction, whether it's buy or it's sell, and then the National Security Clearing Corporation comes to picture, where it clears the transaction. It exchanges the shares from the seller to the buyer, and it exchanges the money from the buyer to the seller and deposits in the shares and money in the depository, and then the client can see that in the broker window. And banks are the silent partners in this ecosystem, where pay in and payout is done from the banks. Let's go in detail about each of these components and understand the stock market ecosystem. Let's check about the brokers. In broker, there are two types of brokers. One is full-fledged brokers and another one is discounted brokers. Zerodha, Alice Blue, Fires, these are the discounted brokers. And SBI Securities, ICICI Direct, Sharekhan, Motilal Oswal, these are the samples of full-fledged brokers. What's the difference between the full-fledged brokers and discount brokers is full-fledged brokers give the entire coverage of the stock market. Like they have the mutual fund platform to invest, and they have the analysis sharing. They have experts who do analysis in stock market, and they share the buy or sell recommendation. However, these discounted brokers will not have that facilities, and the platform and the reliability of the full-fledged brokers are high compared to the discounted brokers. Nowadays, discounted brokers are also having good reliability, and one on other cases, some issues are there, which they are fixing and overcoming by their years of experience. Okay, what these brokers actually do? Brokers are the trading members who are registered in the exchanges. They have access to the stock market. Through brokers only you can place buy and sell orders, and you can buy shares only through the brokers. These brokers are guided by the SEBI, Security Exchange Board of India. How a investor can buy or sell a trade is by opening the trading account in the broker. You can do buy or sell. Brokers have trading platforms like web page, mobile app, or advanced dedicated trading terminals. What is that broker gets out of you doing the buy sell? He is getting the broking charge. Normally, broking charge for shares in a discounted broker is zero. They do it for free. However, they charge for futures and options. And the main important aspect from the broker is they do provide margin. Say, for example, if you're selling one lot of Bank Nifty futures, it in cash actually requires around 9 lakhs. However, this brokers provide margin and you really need only 1.6 lakhs. This facility is of margin providing is done by the brokers. And once you do the buy or sell, contract notes with details of tax, exchange charges, buy, sell price, and settlement is done via contract notes by the brokers. Normally, they send contract notes at the end of the day, every day, if as long as the trade is executed. Moving to the stock market exchanges in India, there are two exchanges, which is National Stock Exchange and Bombay Stock Exchange. Throughout this video series, we will be more focusing on the National Stock Exchange, as our learning path will go along with the National Stock Exchange. What does this exchange do? They do buy and sell orders from the different brokers terminal. This gets exchanged in the exchange. This is a place where the buyers and sellers meet. So, suppose a person in Zerodha orders a buy of two lots of Infosys shares, and a person from through Alice Blue account, he's trying to sell two lots of Infosys. Then this exchange happens in the National Stock Exchange server. Okay, so that's why the buyers and sellers are meeting here in the stock exchange. Okay, once the exchange is completing the buy sell order, it goes to the clearing corporation. There are two clearing corporations. One is NSCCL and another one is ICCL. NSCCL is National Security Clearing Corporation, which is the corporation unit of the National Stock Exchange, and ICCL is the clearing corporation limited for the Bombay Stock Exchange. Clearing corporation is the one who clears the trade once the buy sell is executed. It makes sure that the buyers and sellers doesn't default. It makes sure that the money credit is credited back to the seller and buyer gets the shares in his broking account. Now moving to the depository, there are two depositories in India. One is National Stock Depository Limited and another one is the CSDL, Central Stock Depository Limited. That is for BSE and NSDL is for NSE. The depository maintains the DEMAT account, the nominations, the settlements, the statements, account handlings, etc. Actually, if your broker, say for some reason, goes down and is filing bankruptcy, you don't need to worry about your shares, because your shares are actually deposited in either of the CSDL or NSDL based on where you take the trade, either in BSE or NSE. So this depository is the government registered depository. So you don't need to worry anything about your purchased share. Moving to the bank, what does the bank do? While you are opening a trading account, you will have to give a bank account, because the bank account is a place from where you will be able to transfer the fund into the trading account. In the other way, once you do the buy and sell it for profit, and you need to withdraw the money to your bank account, right? So for this reason also, you need the bank account. So you can do the fund paying, or you can withdraw the profits to the trading account, from the trading account to the bank. And in the process of your investment, in case if you are getting any dividends from any shares that you hold, that amount will also get credited to the linked bank account. Okay. Now, let's move to the SEBI, which is the heart of this trading ecosystem. SEBI is Security Exchange Boards of India, which regulates the entire trading ecosystem. So it protects the investor, and it also listens to the complaint from all entities in this trading ecosystem. Let's again have an overview of what we have learned till now. We understood why we are investing in the stock market. We are all here in this video to learn about the stock market and to invest with conscious and with identifying the good companies and with full knowledge. Let's have a review of this entire video again. It's a broker through whom we will place the buy and sell order. The buy or the sell order goes to the NSE site, and it gets executed in the NSE, National Stock Exchange, or BSE, and then it goes to the clearing corporation. And in clearing corporation, the buyer gets the shares and the seller gets the money, and it's cleared and deposited to the depository account. Here, the seller will get the money back and buyer will get the shares back, which he can see in his broking account. And bank is the silent partner in this ecosystem, which is used for paying in the trading account as well as withdrawing the profits from the trading account. Also, dividends will get deposited in this linked bank account only. So with this, we come to the end of this video, and I have given the links of the brokers at the description box. If you open account through one of these links, then I might get a referral bonus from this. However, you will not be charged anything extra. Your brokerage charge will remain the same. You will not charge anything extra. This referral bonus will be a motivation for me. So thanks for watching, and thanks and congratulations for you to complete the first step in your investment process. Let's learn and earn. We will be pushing out next series of videos in coming days, and we will move slowly out from the stock market knowledge and the mutual funds, and thereon how we will be taking the trades. We will give live trades, and then we will be moving out to future options, and we will also share the strategies, how to execute, how to give the entry, exit, everything. So we'll have a huge learning ahead. Please do subscribe this channel and press the bell icon so you will get the updates. Thanks for watching and learning.